One of the first thing which I do in the morning when I come to the office is to look at what is the situational awareness in terms of looking at what has happened last night, what has happened over the last 1 week or 1 month, and then where are we currently in the context of where the move is. And then I look at, like, in the morning, I look at the pre-morning uh, worm, which tells you how many stocks are up or down in the morning. So as of now, when I look at it, 86% of the stocks in pre-market are making new lows. So that gives me an idea about the market. Then also, you look at the scans from last night and see what was showing up and whether there were more or the market monitor figures. That's another thing which helps you make the situational awareness. After that, once the situational awareness, I have a good read on the situational awareness, then I know whether I'm going to be doing, say, entering early, or I'm going to be in a wait and watch kind of a mood. What am I looking for in the market? Am I looking for longs or am I looking for shorts? How much size I'm going to do? Am I going to buy 5,000 shares or am I going to drop my size to 1,000 shares? All those questions I look at. And once that is done, is when I start looking at the visualization. And in the visualization, then I look for like an app. I spend around 15 minutes visualizing what is likely to be the scenario and how to play it based on that scenario for today. So the visualization will typically start with always be in control. So in order to be in control, what do I need to do today? So always be in control in a today's context is going to be like, and I'm going to be more cautious because I see signs of this thing. So, but there are short-term trades available. So I'm looking at always be in control in terms of controlling my risk, how much I want to expose to the market. I don't and what kind of a stops I want to use. So I want to use much tighter stop than I've been using. I was allowing positions to run a bit more. Now I want to use tighter stops, control risk taking, how much risk I want to carry overnight. I don't want to carry more than 2% overnight risk because of my view on the market in the short run. It's more choppier. Yesterday there were a lot more chop, so I don't want to do too much of overnight risk. Fee, find and enter early, which is like, am I going to do fee or am I going to be more tactical in terms of fee, in terms of waiting for the moves to happen? I see for the last 3 or 4 days continuously. In the morning there is a weakness and then the buying comes in the later half. So unless there is a earnings breakout or something which is really standing out, I will be slower to do find and enter early, which would essentially means entering later in the day. Sell into strength, which is a constant thing. I always look at my current position and see which one I want to sell into strength, or at what level if it goes to, I would be looking at selling into strength. T3A, I'm thinking 3 days ahead. So thinking 3 days ahead, today is Wednesday, Thursday, Friday. So what is going to happen? Today is also a news event. So that might create a more volatility. So do I have confidence, a lot of confidence in the market short term for 3 days, or do I have less confidence? Then because the Fed has been supporting this market, or the Fed essentially in the last meetings became dovish because of the dovishness of the Fed. As long as the Fed continues to be dovish, whenever there is a intraday also a down move, or there is a gap down like it is starting with today, typically buying the dip as a trade works very well. Then plastics is essentially three sectors: healthcare, technology, consumer discretionary. And those sectors always make big moves. You can go back and see since the rally started on 27th of July, it's these three sectors: healthcare, technology, consumer discretionary, which have made the biggest moves. Stories, stocks with stories make big moves. So stocks with earnings and sales may not make a big move in the short run, but stocks with just a story, like Bed Bath and Beyond, or like any other stock which has a story, will make a double, triple, go up 500%, 700% in a short period of time, just based on some sort of a story. The story for many of these stocks is just like in a high short interest currently. Then my other visualization is always, because in the heat of the movement, you can always look at a setup and start going into it. But I always want to remind myself every day that real money is in looking at younger setups, looking at younger stocks, finding younger IPOs, looking at a younger strength trend, not really something which is up third, fourth leg. Then linearity, which is the proxy for strong buying. So I'm always looking for putting a trade as a continuation trade in a stock which has exhibited strong and continuous buying, persistent buying. OLC organized like crazy. So like once I come into the office, I organize everything, my applications, my brokerage, everything will be in place, which is always in place, but it's just like making sure that everything is in place. Then one of my objective is to trade more high price stocks, because high price stocks have lower volatility. So then I look at the high price stocks. So once this video is done, I'll go through every stock which is priced about $90 and look for an anticipation setup, or a setup for like reversal, or a setup which might be a bullish reversal or a bearish reversal. Similarly, any stock which has a very high volume breakout in the recent 4 or 5 days, any stock which has a 20 million plus shares traded in the last 4 or 5 days, is something I want to keep an eye on, because those are the stocks historically they can go on and have a second, third, or they can sometimes keep on going up for like in a months or years. So keeping an eye on stocks which are 20 million plus volume breakout in the last 10, 15 days or 20 days is something which I will do in the morning. Then for anticipation, I have like what I look for is a 3 tight days or a 2 tight day or just a 1 tight day. So that kind of a work I already do during the day, but just to add to that work in the morning, I just again go through anticipation setup, because sometimes the anticipation setup show up in the last few minutes before the close and you don't get an opportunity to get in. But if they are good, then I'll put them on a watch list. Then I just remind myself of what is it that I am continuously looking for. As you know, if you remember that I look for a particular set of criteria for looking at a breakout, and those criteria is tool inch. Similarly, if I'm looking for a EP, there is a set of criteria which has to be met. Those conditions are to be met for considering EP, and those are Magna 53 plus Cap 10 multiplied by 10. So those are my set of criterias which are specific to finding a life-changing EP. There are a lot of EPs which are going to make 10%, 20%, 30% move in couple of days. Those EPs are just regular earnings breakout. But the one which really can change your life in terms of they can make 300, 400, 500% move from a EP have a specific characteristic, and those characteristics, the short form for that is Magna 53 plus Cap 10 by 10. Similarly, the short setup which I trade is a weak structure short, and the short setup which I trade, I'm always looking for Niagara 3 by 10 week 3. So that's also a specific kind of a continuation short setup which I trade, and those are the conditions for that particular thing. Reminding yourself of like what setup you're going to be trading is important, because one of the problem a lot of traders have, or many of the beginner traders have, is they just like float from method to method. I stick to my 3 types of setups: the one which is tool inch, Magna 53, and Niagara 3 by 10. Now in terms of EPs, when you get EPs, there can be 2 types of EPs. One kind of an EP is a growth EP, so it's some company which is starts growing crazily. The other kind of EP is a turnaround EP. Now again, in the morning, I visualize, because turnaround EPs, you need to be attuned to finding turnaround EPs, because many times in a turnaround kind of situation, the stocks look very beaten down, and something which will not be something which you typically look at it in a typical EP. So I always remind, always look for a turnaround EP, because turnaround EPs often makes bigger moves than growth EPs. And then I have a method for longer term trading, which I once in a while, there is a trade which is triggered by that methodology, and it's called country in trouble, which is a country which has extreme trouble, which is has great financial difficulty. And if you buy a country when it is at trouble, if you buy a country ETF, then that ETF can double, triple. So this is a rare trade, but I always keep an eye open for it, because you never know when that trade will show up. For that, again, I have a set of conditions which need the country in trouble trade needs to satisfy in order to do this. And then finally, overall, I always have this philosophy of trying to find money with the least amount of risk, which is called FFM, and that's my visualization. So this is the visualization exercise which every day I start with, and then I do my work for preparing for the morning.